Hey everyone. Hey there, it's Sive Morten from ForexPeaceArmy.com. I'm back with our daily gold market rundown. Today we'll just quickly run through the latest news before jumping back into the technical picture for gold. What should we do and what might happen in the near future? What's our overall expectation here? On the fundamental side, with recent news, you can see gold dropped when the US GDP data came out. The numbers were actually pretty solid, 3% nominally. The PCE index showed moderate growth too. Inflation's coming down, as Jerome Powell pointed out later in his comments. This put pressure across all markets, gold included. But let's clear something up. There's really no fundamental reason for gold to take a serious dive. What we're seeing now is mostly a reaction to the dollar getting stronger. It's not so much gold falling on its own, but like we explained earlier this week, it's connected to Trump's tariff situation. All those agreements with partners, whatever they might be, have been signed. And this is a kind of, so to speak, achievement of a certain goal. As a response to this achievement and the relief from all that constant tariff tension, the dollar started climbing. That's what affected gold. That's the main thing going on here. Even though we're still bullish on gold long term, we think the upward movement should pick back up soon. And the way gold is behaving right now shows that there's still some positive sentiment around it. The drop wasn't nearly as bad as what happened with the euro. The bounce back we're seeing now is stronger too, compared to the euro. The situation here is a bit different from what we're seeing in the forex market. Looking at the daily chart right now, we can see a really nice level for a potential entry point. We've talked about this before, it's our main scenario. 3246, 3250 is our support level. Here we also have an ABCD pattern target. So basically we've got a zone of agreement here. Typically markets tend to reach their target and then show some kind of reversal. But could gold possibly reverse earlier? I think since the market is generally heading toward the non-farm payrolls data release, we probably won't see a reversal before that happens. If the data turns out pretty good, then things will likely play out as we expect. So basically the market will first hit that 3250 level, and then we might see a bit of a pullback afterward. That said, we need to keep a close eye on what's happening on the intraday charts. If we start seeing something genuinely bullish forming there, it could signal an early reversal might actually happen. Although, as I said, I think the chances of that happening are way lower than us reaching that 3246 level. Looking at the daily chart, we got this reversal session yesterday. You can see the market made a new high, but then closed below the lows of not just the previous session, but the one before that too. It's basically accelerating downward. So I wouldn't jump the gun here or claim that gold is all set to go up and that we won't hit this level. I just wouldn't say that right now. What about possible trading scenarios today? What are we seeing on the 4-hour chart? Right now the market is flirting with the MACD line. Yesterday we traded a similar setup with the euro. It worked out really well. The outcome was fantastic after that drop. We might see the same thing happen with gold. Considering we're aiming below market levels, those payroll reports could work in our favor too. So there's a pretty good chance we might catch a bearish grabber pattern. If it forms, accordingly, the target of this pattern will be at least these minimums. But considering the big picture, since the market isn't oversold, we might actually see prices drop further if this pattern develops. So we'll need to keep an eye on this. Looking at the hourly chart, actually I'm using the 15-minute chart here so you can see things more clearly. Check this out. First off, we've got a breakout from this consolidation that was forming yesterday. We talked about this in our review, right? That for any decent pattern to emerge, the market needed to break through this level, this range downward first, and then maybe something interesting would happen. But because the data came out very good, consequently, nothing else happened. The market just tanked. Now on the 15-minute chart, see what's going on here? There's a hint of a small reversal formation. It might be something that looks like a head and shoulders pattern. But here's the issue, this pattern contradicts the potential bearish grabber on the 4-hour chart. So keep your eyes peeled. If you're thinking about day trading and betting on any of these patterns, either the grabber or the head and shoulders, just be super careful. Watch closely to see which one actually forms. This pattern might suggest an upward trend, possibly a deeper correction. So if you're looking to trade this, your entry points should be at support levels. The nearest one is around 32.90. Just keep an eye on it and go with what feels right to you. Though honestly, I'd be pretty careful with any bullish patterns right now. Just because the market's looking bearish overall, we still have that unfinished target at the 32.45 level. This pulls the market down, so any bullish patterns, especially on super short time frames like the 15-minute chart, are really risky. So be extra careful, okay? I'm just sharing what I see and what might actually happen. Plus, if this pattern forms, we're looking at a pretty deep correction, which means we could potentially be talking about something bigger. For instance, looking at the head and shoulders pattern on the 4-hour chart, if the market somehow manages to bounce back to around 33.30, we might actually see a more significant reversal formation taking shape. That could really cast a bigger shadow over things. We might hit level 32.46, but let's not get ahead of ourselves just yet. The non-farm payrolls report is still coming up. This pattern on the 15-minute chart isn't fully formed yet, and we still don't know what's going to happen with the 4-hour chart. So let's keep an eye on it, and tomorrow, right before the payrolls report, we'll come back to this, see what actually went down, and figure out what positions we might want to take on gold.